Welcome to Technical Tuesdays. This is Fred Razak, Senior Trading Strategist here at CMTrading, and today we're going to start a new series on the basics of technical analysis. But before we start, make sure to like, subscribe, and share if you do find value in this presentation. So let's just get straight into it. So this series is going to build on different topics, and every time I'm going to pick a different aspect of basics of technical analysis just to break it up, and it'll be very simple and very user-friendly. So we've delved into the premises of technical analysis. If you haven't seen it, it's in the video library on whatever channel you're watching this. And this is probably the first part of actually getting into the aspects of technical analysis on the charts. Now, technical analysis is really a representation of us, okay? It's our emotions, it's our intelligence, it's our biases, okay, at any given time that we impute into the market at any given time, right? If we as collectively as a society deem a certain product or a certain company to be a value and we think that the value will increase over time in the future, well, that price of that stock or that price of that product will increase, okay, as a reflection of the fact that we have that bias. Now, if we think something is overbought and we think something is overvalued, then it's going to do the flip side. It's going to sell off, right? But it's based on our biases. And that's really what's very important here. There's a lot of psychology that is put into technical analysis. There's not only psychology, there is the market, the financial markets, obviously, that go into it, but there's also economics, okay? So the technical analysis is taking a few items and kind of putting them all in an array of representation on the charts. Now, as a technical analyst, over time, you kind of pick up these nuances and they kind of repeat themselves. So today, we're going to discuss two concepts: support and resistance. Okay, that's going to be the first part. And this is really the backbones, the skeleton of technical analysis. So what is support and what is resistance? So jumping into it. Okay, so support is on the charts. Let's just take a look at it. It's every time you see the charts go like this, it's up and down, but every time it hits a certain line, right, it's jumping off of that line. Okay, that is support. Now, the definition of support is a price level at which demand is thought to be strong enough to prevent the prices from declining any further. Okay, and basically, if you want a real life example of that, well, you've gone to the supermarket, you've seen items on sale, right? They put a particular item on sale. There's lots of them, 2 for $10, something to that effect, right? And normally it costs 2 for $12, maybe because the expiration date is coming up, or maybe because they want to make more shelf space, whatever the matter is, okay? They want to move those goods. So there's a lot of supply, and they're hoping that demand will go up, okay, because there's a lot of supply. So what do they have to do? They have to lower the price, okay? And they lower the price to a point where you say, hey, it's a no-brainer to buy this. Now, it's not going to go lower than it, because then at any given time, supply is going to increase, demand, is going to increase, and because it's way below its value, right? And if it's way below its value, it's going to be a no-brainer to buy it here and to resell it somewhere else, right? And that is what happens to prices. That is why they bounce off of these charts on a certain level. Now, we collectively, as a trading community, whether we're in Japan, whether we're in the UK, whether you're in the United States, South Africa, South America, anywhere in the world, you're looking at the same chart. You're looking at the same price levels that everybody else is looking, and we create these supports. They're happening in the markets all the time, okay? And this is really just a very basic analysis of when you hit support, what do? You buy it, okay? It's a simple concept, okay? It's every time it hits that, you buy it, okay? There have been numerous trades that I've taken advantage of based on support. It's just very simple, okay? So that's support. Now, the flip side to it is resistance. Resistance is basically when you have the markets keep on going lower and they hit a certain price point and it just can't break above it, right? It hits, let's say, $15 or $10, but it can't break above it. And the reason is that the demand is thought to be weak enough to prevent the prices from going up any higher. Okay, that is the textbook definition of resistance. Now think about it, okay? If items in the store become so expensive, right, you're not going to buy it, I'm not going to buy it because it's too expensive for what it's worth. So you're going to gravitate to something else and use it as a substitute because the prices are just too high. There's low supply, there's relative low demand because the prices are so high. Now, once the prices, kind of dip, demand kind of goes up. So, the prices go back up. But at a certain point, it becomes too expensive to actually buy it, right? So those are replications of what the market is doing when it's looking at goods and services. But it's also the replication of what the markets are doing when you're assessing the value of an asset. So anytime we look at a particular asset, we're kind of assessing at any given time what its true worth is. But at a certain level, it's way overpriced. This is a situation where something is way overpriced, and at that point, no buyers show up into the market and the prices drop. Supply and demand and price. That's all these two things of support and resistance consist of. Thank you for joining us for Technical Tuesdays. We'll see you here next week.